إن صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين.
Um, okay, so we are looking at the question in May 2019. May 2019, question 1. Now, before we solve the question, you are supposed to solve a consolidated statement of profit or loss. Consolidated statement of profit or loss and other comprehensive income. So what are the key things we need to do? The key things we need to do is that in this case, this is not level 2, this is level 3. So you have 3 companies. You can see from the question, you have 3 companies. You have Who, you have Sunyani, and then you have Kumasi. It is possible that, from the question, it is possible that you can have Who to be a parent. You can have Sunyani to be a subsidiary. And then you can have Kumasi to also as a subsidiary. When that happens, it means you have a parent and 2 subsidiaries. So when this happens, it means you have a parent and 2 subsidiaries. Is that clear? And it's also possible that you can also have Who as a parent. One of them, maybe Sunyani, as a subsidiary. Then the third one, maybe Kumasi, may not be a subsidiary. It may be an associate. So when that happens, it means you have parent, subsidiary, and an associate. Now, so whatever be the case, now if it is parent, subsidiary, and associate, you know that for an associate, we don't consolidate an associate, right?
Yes.
We don't consolidate an associate. I told you that the associate only affects the P&L in 2 ways. The first one is you add share of associate profit. Do you remember?
Yes.
Do you remember I taught you that associate, the only time it affects P&L is before the profit before tax. You will calculate share of associate's profit. Then before the total comprehensive income, you also calculate share of associate's other comprehensive income. Is that clear?
Yeah.
These 2. But then, for subsidiaries, you have to consolidate them. And so you are consolidating the subsidiaries, then you are adding all the 2 of them. But what you need to be careful about is that this time around, it is level 3. And so if it is 2 subsidiaries, and you are adding all the 2 subsidiaries, assuming this is the case, and you are adding all the 2 subsidiaries, then it means that you need to be careful about what? The post-acquisition period. Is that clear?
Yeah.
You need to be careful about the post-acquisition period to see, so that if it is less than 1 year and you have to multiply by a fraction, you don't make that mistake. Assuming it was only 1 subsidiary, that one I can write, let's say, revenue. If I write revenue, let's say 30,000 plus 10,000. I can move on. Because should I move on, later if I come back and I realize that the post-acquisition period is, let's say, 6 months, I can just multiply this by what? 6 over 12. Cost of sales, maybe I've already written 10,000 plus 6,000. I can just multiply by 6/12. Are you getting the point?
Yeah.
Getting the point?
Yes.
Hello, I need responses. I need responses. The responses that will tell me that you are following what we are doing.
Yes.
But if it happens to be two subsidiaries and I make a mistake by adding, so look at this, assuming it is two subsidiaries, and then I make a mistake by adding, let's say revenue, and I've already added 10,000 plus first subsidiary 6,000, and then second subsidiary to 8,000. Now, if I do my group structure and I realize that maybe the first subsidiary operated for only 6 months, where am I going to put the 6 months? Do you see I'll be found wanting?
Yeah.
I'll be found wanting here because I've already added 800. So for level 3, once there's a possibility of two subsidiary, the key thing you need to know is that always prepare your group structure. Always prepare your group structure before adding the subsidiaries. Are you getting the point?
Yeah.
This is all I was trying to establish to you. So at level 3 level, at any point in time, you need to put down your group structure first to see how the group structure looks like before you add the subsidiaries. And so let that be at the back of your mind. Now let's start the question. So somebody should read the question for us. Someone should volunteer and read the question for us, sentence by sentence. That you take your time and read it sentence by sentence. Yes. Question 1. Or I should read myself. Should I read myself? Okay. It says question 1. On 1st October 2016, Ho Limited acquired 60% of the equity interest of Sunyani. Who acquired 60% of the equity interest of Sunyani. So right from there, I've gotten a picture in my mind that a company acquired another company. So possible console. Then you go to the requirement. When I went to the requirement, it says prepare a consolidated statement of profit or loss and other comprehensive income for the year ended 30th September 2018 for the whole group. So you open a fresh page, then title it whole group. Everybody should move alongside me. Whole group. Then you write consolidated statement of profit or loss and other comprehensive income for the year ended or the year end 30th September. Make sure you don't shorten anything. Write it in full for the examiner 2018. Underline it neatly. The statement from the question, the statement was in thousands of Ghana cedis. Let me put down my thousands of Ghana cedis here. So just list the items. Just list the items. Revenue. So at this point, pick only the parent, 200,000. Pick only the parent because you don't know how the rest will be. So here, because there are 3, it will be better to add it under it. Every item, do the addition under it so that you have a long space. So revenue, I have 200,000. Then you leave it open. Cost of sales. Now, I've always said that cost of sales, there are a lot of treatments. So use double lines. Use 2 lines as your bracket, 2 lines like this. Then provide for your gross profit. The first cost of sales figure is what? 156,000. Please, are you following? I need you,
Yes.
I need you to talk. If you don't talk, I'll assume you understand and I move. Then after gross profit, what we have? We have other income, administrative costs, other expenses. So just put them there. Other income. Yes, other income. What is the figure? 10,500. We have what? Administrative costs. Administrative costs. Open bracket. Put there 7,500. We have other expenses. Other expenses. So, please, are you seeing the other expenses?
Yes.
I think the board. Okay, so let me expand it. Let me bring it here. Other expenses. What is the other expenses figure?
17,500.
17,500. Then we have what? Operating profit. So create your column for the operating profit. Then we have what? Finance cost and then finance income. Finance cost. What is the figure?
2,500.
Hey, I'm hearing only one person's voice. If she gives us a wrong figure, we will be found wanting to know. Then we have what? Finance income. We have about 20 people on board, and then only one person is talking. Finance income, yes, we have what? 3,000. Then you see, we have profit before tax. And like I told you, in Consul, if there is an associate, there is a possibility that you will have share of associate profit just before the profit before tax. So at least leave a line, at least leave one line, before you put the profit before tax, so that in case the associate is there, you will not be found wanting. So put the profit before tax. Now, after profit before tax, what do we have? Income tax. Give me the income tax figures. Give me the figure. 9,500, right?
Yes.
Then what do we have? Profit for the year, right?
Yeah.
So create the column for profit for the year. Then we have other comprehensive income. Other comprehensive income. Yes, and other comprehensive income, we have what? Revaluation surplus. Revaluation surplus. That one too. What do you have in bracket? The parent is 5,000, so 5,000. So you also leave one line in case there is an associate. You also have associate share of other revaluation surplus. So you leave one line before you close it and have your total comprehensive income. Total comprehensive income. Then you know that once you've gotten the total comprehensive income, you need to share the profit and the total comprehensive income. So I'll leave two lines under it and I share. And I'll say profit for the year attributable to. Profit for the year attributable to. This means this is how I'm sharing the profit for the year. Now, which people would the profit be shared for? The profit is supposed to be shared for two groups. Who are those two groups? Who are the two groups who will take the profit? It is the NCI and then the owners of the parent, right? It's the NCI and the parent. That will give you the profit. Then you leave one line to share the total comprehensive income too. the total comprehensive income, also attributable to NCI, and then owners of parent. So that is it. So you prepare this, your pro forma down. I believe everybody has written down the pro forma. Have you all done this?
Yes.
Have you all done this carefully? Write down your pro forma nicely. When you are done, then we are going to the workings. So the next page, you start your workings carefully. Your workings. You can state all figures in thousands of Ghana cedis so that you don't waste time repeating yourself. Question is not difficult at all. You see it with a lot of things. There's nothing involved. So now let us take the question. So to take the question, now I have told you time and time and time that anytime you meet a question and on the question paper, the whole thing looks so clumsy. Look at the information on the question that's so clumsy. So you will see that if you are not careful and you try, if you are not careful and you try solving the question from the information you are getting the question, if you are not careful, you may end up messing up because sometimes it's very difficult listening to the question, reading that clumsy information and analyzing it. So the best thing you do as a student is that collect your information down, collect it as a summary down carefully. In fact, the exams or the papers, you have paid for it in advance. That's why they collected plenty money from you during the registration. Therefore, if you need 200 pieces of the paper to be satisfied to work, nobody can question you why you are collecting 200 pieces. So far as you are working with it, you are fine. So it's rather better to take your time and put down the facts carefully. So that when you put down the facts carefully, you will know where there is an associate, where there is what, a subsidiary, or you put down all the careful information. Then you'll be able to analyze it very well. So I'm going to put down a summary of my information, but look at how the information is looking like. So clumsy. I cannot analyze it on the question paper. So I'm going to put down my summary carefully. So my summary, let me put down my summary, which will help me to analyze my work. It says on 1st October, who acquired 60% of the equity interest of Sunyani? So then I put here that who acquired Sunyani 60%. I'm taking my summary. On 1st October 2016. 1st October 2016. A public limited liability company in Ghana. The purchase consideration was made up of cash of 40 million. So cash 40,000. Remember, we are working in thousands. Cash of 40 million. And the fair value of the identifiable net assets acquired was 55 million. So net assets of Sunyani, it was Sunyani that was acquired. So the net assets of Sunyani was 55 million at the time. So 55,000. Just take your time gently, and then you move. The fair value of the non-controlling interest in Sunyani was 22.5. NCI was 22.5, so 22,500. Just take your time carefully, then we are going. On 1st October 26, so I'll put this down. Now it says, who wishes to use the full goodwill method for acquisitions? The share capital and retained earnings of Sunyani were 12.5 and 32.5 respectively. So share capital was what? 12.5, so 12,500. Retained earnings was also what? 32.5. 32,500. 32,500. And then other components of equity. Other components of equity was what? 3 million. So 3,000. I'm taking my facts carefully. At the date of acquisition, the excess of fair value of the identifiable net assets at acquisition is due to a non-depreciable land. So now, right, excess is non-depreciable land. The excess is non-depreciable land. Good. Goodwill has been tested for impairment annually. And as at 30th September 2017, that's the previous year, it has reduced by 20%. Okay, so goodwill at 30th September 2017 has impaired by what? 20%, right?
Yes.
That's previous year. But this financial statement is for this year. However, at 30th September 2018, the impairment of the goodwill had reversed. Okay. Impairment had reversed at 2018. So by 2018, they had reversed that goodwill and valued at 1 million above its original value. And again, it has been valued upwards. Goodwill, they have reversed the impairment. It has also been valued upwards by 1 million, so 1,000. So you see, they have reversed the goodwill by increasing, they've increased it again by another 1 million. Okay. The upward change in value has already been included in the draft financial statement of who. So they have already recorded this transaction in the financial statement. Great. Then let's go to the footnote 1. Who disposed of an 8% equity interest in Sunyani on 30th September 2018. So I leave a line and take that one to who disposed. So since where I'm writing, you may not see because yes, who disposed 8% of Sunyani. So he disposed 8% of Sunyani on which date? 30th September 2018. So on 30th September 2018, that's the beginning of this year, 1st October. Okay. For a cash consideration of 9 million. So for cash, 9,000. Then it says that, and had accounted for the gain or loss in other income. Okay, so gain or loss has been put in what? Other income. You need to note all this because that is where you'll be doing your adjustment. The gain or loss has been put in other income. The carrying value of the net assets of Sunyani at 30th September 2018 was 60 million. So carrying amount of the investment at that date of 30th September 2018, it was what? 60,000. Excellent. So the day they disposed, by the time they disposed, the current amount was 60,000. Good. And it says what? Before any adjustments on consolidation, who accounts for investments in subsidiaries using IFRS and financial instruments and has made an election to show gains and losses in other comprehensive income. So here too, he has made an election that gains and losses will show in what? Other comprehensive income. Good. Then it went further. The carrying amount of the investment in Sunyani was 45 million at 30th September. Was 45 million at 30th September 2017. This is the carrying amount of the net asset. Let's be careful. This is the carrying amount of net asset, not investment. This carrying amount of the net assets here. Then again, they said carrying amount of investment carrying amount of the investment carrying amount of the investment, yes, at 30th September 2017, they say it was what? At 30th September 2017, it was what? 45 million.
Yeah.
45,000. 45,000. At 2017, it was 45,000. Then at 2018, it was what? 47.5. So 47,500 at 2018. Good. Before the disposal. Okay, so this is before the disposal. So before the disposal, this is the book value of the investment. Good. Let's go on. Note 2. Who acquired 60% of the equity interest of Kumasi? So this information is for Sunyani. I'll leave a line and collect Kumasi to separately. So I also go. Don't be in a hurry to get answers when you have not gone through the process. Imagine I start solving the question with all this plenty information. Do you see what is likely to happen? You are going to get confused. Are you getting it?
Yeah.
Imagine I started solving, then straight away I was adding up figures and doing good structure with all these humorous things they said. You'll get confused. But I can tell you that these plenty humorous things you are seeing is so simple when you collect your summary and we start solving. So exercise patience, be calm, take your summary. Don't be in a rush to get answers when you have not gone through the process. So let's go. Who acquires 60% of the equity interest of Kumasi? So let me see who acquired Kumasi too. So we've dealt with Sunyani. Now we are dealing with Kumasi 60%. The limited liability company in Ghana on 30th September 2016. So that one today, what is 30th September 2016? The purchase consideration was a cash of what? 35 million. So cash, 35,000. Then the fair value of the identifiable net assets was 43 million. So net assets at the time was what? 43,000. And then the non-controlling interest had a fair value of 14 million. NCI is 14,000. Great. On 1st October 2018, who disposed of a 40% equity interest in Kumasi? So who disposed 40% of Kumasi? Which date did they dispose? On 1st April 2018. 1st April 2018. Good. For a consideration of what? 25 million. So for cash, 25. Anytime there is disposal, the students cancel. The reason why I'm very particular about this question was brought in May 2019, and the same question was brought last night. It was just a change of name and figures. Are you aware? Are you aware last night this was the same question they brought? They just changed the name and the figures, but the same wording, everything. Okay, for 45 million. And then 40% for a consideration of 25 million. Kumasi's identifiable net assets were 45 million and NCI was 70 million at the date of disposal. So at the date of disposal, so let me say at date of disposal, you need to be very careful with this information. At the date of disposal, something is happening. At the time they sold it, they are telling you that Kumasi's identifiable net assets was 45 million. Net assets of Kumasi at the time they disposed was 45 million. And then the value of NCI was what? 17 million. NCI was also 17 million. at the time they disposed. This one, the top one was at the time they acquired, and this one was at the time they disposed. Good. The remaining equity interest was fair valued at 20 million. So remaining equity interest, the fair value is what? 20,000. Good. Then, after the disposal, who exerts significant influence? Any increase in net assets since acquisition has been reported in profit or loss, and the carrying amount of the investment in Kumasi had not changed. Goodwill had been tested for impairment and found that no impairment was required. So no impairment in Kumasi. So the investment in Kumasi had not impaired. Yes, no impairment was required. No entries have been made in the financial statement for this transaction other than the cash received. So this is not recorded. The disposal has not been recorded. Okay. 3, who sold inventory to Sunyani for 6 million? Now, these are the standards. This is unrealized profit. 4, on 1st October, who purchased an item of plant and equipment, PPE? 5, on 1st October, who made an award of 4,000 shares to each of his directors? Share-based options. Share-based payments. So you can see these are the standards. As for the standards, we'll be able to deal with them. So now we finished collecting our summary. So you can see from the analysis that all that I was interested in is this. All that I was writing in the summary, somebody will ask, so in this summary, Kra is talking about what at all are we supposed to put down in the summary? You can see that what I'm collecting in the summary, the information I'm collecting is that information relating to the acquisition of the 2 subsidiaries. Are you getting the point? Hello?
Hi.
Hey, where are the rest? They are not responding. Hello?
Hi.
Are you listening to me? There are a lot of people. I want to hear the voices and be convinced that they are following. Alasan Shaibu, Daniel Busumpre, Evans, Awa Muhammad, and all that. Where are they? Awa Muhammad, John Darlington, Lauren, Philip Shaida Korti, and Co. Where are they? They've all muted themselves. Please open. John Darlington, King, and the rest. Oga, Timmy, I need to make sure you are following.
So we are here.
Okay,
We are here.
that's fine.
Yes, sir.
If I'm hearing the voices, then I'm convinced. What I'm saying is that this summary I'm collecting, somebody will ask himself, what at all is he putting down in the summary? What I'm interested in at that moment is information relating to the 2 subsidiaries. Are you getting the point? From the question paper, if I look at it, clearly I'll see that as for who there is the parent. So I don't need any information on the parent, but the 2 investee companies there, whether they are associate or they are subsidiaries, Sunyani and Kumasi, I'll collect every information relating to Kumasi at one point and collect every information relating to Sunyani at another point. Are you getting the point? So
Yes,
if I look at the first one, it is relating to Sunyani from the beginning. They told you on 1st October 2016, who acquired 60% of Sunyani, then you put it down, who acquired Sunyani 60% on that date. The purchase consideration was made up of a cash, 40,000. Fair value of the net assets was what? 55 million. NCI was 22.5. Then you are putting it down. Then they told you that who uses the full goodwill method, the share capital and retained earnings were 12.5 and 32.5. So share capital 12.5, retained earnings 32.5. Then you are putting them down. And other components of equity, other components 3 million. And they said the excess is due to a non-depreciable land. Then it says what? Goodwill has been tested for impairment at 2017 and it has impaired by 20%. However, they said that impairment has been reversed at 30th September 2018. And again, it has been valued upwards by 1 million. Then you are collecting it. All this is relating to Sunyani alone. Then they went further. Note 1. They said who disposed 8% of the equity interest of Sunyani, still on Sunyani, then you put it there. Who disposed 8% of Sunyani on 30th September 2018 for a cash of 9,000, then you put it there, cash of 9,000. And they said the gains and loss have been accounted in what? Other income. Then he went further. And it says that the carrying amount of the investment in Sunyani was 45 million at September 2017. So at September 2017 was 45 million, the carrying amount. And then at September 2018 was 47.5 before the disposal. Then the next one, who disposed 60% of the equity interest of what? Kumasi. So this is related to Kumasi. So everything I've collected for Sunyani, I'll put it at one side. Then I leave maybe a line. Then I collect that of Kumasi too. It tells you who acquires 60% of the equity interest of Kumasi. I put it down on 30th September 2016. Then he went further and said the purchase consideration was a cash of 35 million, net assets was 43 million, NCI was what 40 million. They did they acquired it. Then he went further and said that on 1st April, who disposed of 40% of the equity interest of Kumasi. So who disposed 40% of Kumasi on 1st April 2018 for a cash of 25,000. Then they said at the date of disposal, the net assets of Kumasi was 45 million, NCI was 17,000. So these were the value of net assets and NCI at the date of disposal. And they said the remaining interest is what fair valued at 20,000. No impairment is what recorded in Kumasi, and the transaction relating to the disposal have not been recorded. The moment I do this, I'm fine. I have collected all my information. So now, if I want to do any adjustment on either Kumasi or Sunyani, I won't go to the question paper again. I'll rather come to my own summary. My own summary, I will understand it better than what is on the question paper. Are you getting the understanding now?
Yeah.
Good. So now I can prepare the group structure. So now one. I can prepare the group structure now. So now I need to analyze who is a subsidiary and then who is a subsidiary and then who is an associate. Now look carefully. In the acquisition of Kumasi, so you let me put Co here, Co Limited. Then I have Sunyani and Kumasi. So let me put down Sunyani here. Sunyani. Let me put down Kumasi here. Now, if I go to my analysis on Sunyani, let's go and see whether it is a subsidiary. Now, we bought Sunyani 60%. Is it a subsidiary?
Yes.
Sunyani, we bought him 60%. Is it a subsidiary?
Yes.
Even when we disposed of only 8%. So when we disposed of 8%, it remains 52%. He is still a subsidiary. Is that clear?
Yes.
That means by the end of the year, it was a subsidiary. Okay. So let's go and see. So let's go and see the direct interest. The direct interest we bought in Sunyani was 60%. Now, let's go and look at Kumasi. Let's go and look at Kumasi. This is Kumasi. This is, where is that of Kumasi? Now, this is Kumasi. For Kumasi, we bought 60% of Kumasi. And then when we bought 60%, we later, oh, please, if the one having this thing, Azan, do put off your, mute yourself so that you not confuse others. Please, who is it? So that I mute the person. Who is it? I think it's Mashud. Okay. So let's see. What happened to my whiteboard? Oh, what happened to my board? Oh, suddenly I've lost my board. Oh, is it a network? What happened? Is it a network? Oh, 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 oh. Oh, 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 oh. Oh, I think my network. Oh, Okay, so I've retrieved the whiteboard back. Now, this is what I'm saying. I'm saying that for Kumasi, we bought 60% of Kumasi on 30th September 2016. Even when we disposed, now watch, when we disposed 40%. Will it still be a subsidiary at that point?
No.
Will it still be a subsidiary at that point?
No.
Hey, the rest of you, this is the technical aspect. I need to hear from you. This is the technical aspect of the work. Those who are quiet, John Darlington and the rest, you will become confused though. When you draw me back, I'll not come back to this. Mami,
Okay,
Rashid,
okay.
Philippa Megache, and the rest. This place is very, very technical. That's why I want you to listen to it. So please respond to me so that I'll be convinced that you are understanding it. I am saying that when we bought Kumasi, we bought him 60%. But later we disposed 40%. Will it still be a subsidiary?
No.
No.
Good. It will not be a
No.
subsidiary. However, we bought him in 2016, 60%. That means that for the 2018 year we are preparing the statement, we disposed the 40% in April, meaning he was a subsidiary for the whole of October, November, December, January, February, March, before he became 20%, which is an associate. Is that clear?
Yeah.
Yes.
So you will still indicate that, okay, I bought direct interest of 60% there. Now, indirect interest, there was no indirect interest anywhere. So it means that initially, we have an effective interest of what? Initially, we had an effective interest of what? 60% in both of them. But what happened subsequently? There was a disposal. When we were disposing, for Sunyani, we disposed 20%. Is that clear? And for Kumasi,
8%.
8%.
8%.
Thank you. And you are following. Thank you. For Sunyani, we disposed of 8%. And then for Kumasi, we disposed of what? 40%. So at the end of the day, this one gives us a remaining interest of. So the interest that was left here was what? 52%. And this one was what? 20%, right?
Yes.
So you can now find NCI. So NCI here will be 48%. This has now become an associate, so no NCI. And then that will give us 100%. And then by the end of the year, this is now 20%. So the date of control, the date we control them, which date did we gain control of Sunyani? Which date did we gain control of Sunyani? Let's go back to the information of Sunyani. We bought Sunyani in October 2016, 60%. So straight away, we got date of control 1st October 2016. And then what about the date of control for Sunyani? We controlled Sunyani, Kumasi. We controlled him in September 2016, that's 1st October 2016, all right. But then by the year end, it became an associate on 1st April 2018. Are you getting it?
Yes.
And then this is the associate I have indicated. So since I have indicated the associate here, I'll say that 1st April 2018, that's when it became an associate. And then the reporting date. The date of the financial statement is 30th September 2018. 30th September 2018. So you can see clearly that for the Sunyani, we have consolidated 1 year already. So this is 2 years. That means this one we are consolidating it full year. Do you agree?
Yes.
We are consolidating this one full year. Do you agree?
Yes.
But this one, April to September, it became an associate. So we are consolidating only from October to March. That is October, November, December, January, February, March. That's a period of what? 6 months. Is that
6
clear?
months. Yes.
So now, the rest of the information acquisition, when it was changing to associate and you write it right under it. You need to explain further because there was a breakdown. So explaining further, You explain further and narrate that. Then you say acquisition of Sunyani. So for Sunyani, we say what? Sunyani is controlled. Is controlled.
Yes, your whiteboard is vanishing.
No, it didn't vanish. I've finished this and I've gone to the next page. I've gone to the next page. Should I go back for you? Here, I've finished this and I'm saying that under the group structure, you need to clarify how the changes came. Are you getting it? So I'm explaining that the acquisition of Sunyani, what happened there? That Sunyani is controlled from the 1st October 2016. Now, the disposal of 8% did not result in a lot of control. So I'm doing this to remember you. Did not result in loss of control. Because of you, I'm doing this. In exam, so you will not need to write all this. Loss of control. But then, the acquisition of Kumasi, exam, so if only you can remember and work. But because you will be doing revision, I'm doing this so that you understand. Acquisition of Kumasi. Then we say what? Kumasi is controlled at 60% from when to when? From 1st October 2017 to 31st March 2018, when it is a subsidiary, when it was a subsidiary. At that point, it was a subsidiary. Do you get it? But I would say that from 1st April 2018 to the end of the year, 30th September 2018, Kumasi becomes what? It now becomes an associate. Is that clear? After the disposal. After the disposal of what? 40%, resulting in what? Resulting in only 20% interest. So I think you all understand this. Do we all understand this?
Yes, please.
Hello, my people, do you all understand this?
Yes.
Meaning that as for Sunyani, we'll consolidate him full year. But for Kumasi, we'll consolidate him what? 6 months. Is that clear?
Yes.
Good. So now let's go to our P&L. So now let's go to our P&L. We are now aware that we will add Sunyani fully. Then we'll consolidate Kumasi what? 6 months. So now let's go back to the question and then mention them for me. Mention the figures for me so that I consolidate. You are mentioning Sunyani fully and Kumasi
Okay.
6 months. So for the revenue, Sunyani was what? 57 what? Please mention it for me.
57,500.
57,500 fully. And then
Yes.
this one is 6 months. That's what? 35,000. So 6 months of 35,000. Do you get it now?
Yes,
Yes.
sir.
Cost of sales plus the full amount here is what? 32,500.
500.
And then this one is what? 6 months of what?
18,000.
18,000. Good. Other income, 10,500 plus a full year of
500.
10,500 plus 6 months of what?
1,000.
6 months of 1,000. Good. Administrative cost, 7,500 plus a full year of what?
4,500.
Plus 6 months of what?
6,000.
6,000. Then other expenses, 17,500 plus a full year of what?
9,500.
Plus 6 months of what?
4,000.
Then what do we have next? Finance cost, yes. 2,500 plus a full year of what?
1,500.
Plus 6 months of what?
2,000.
Finance income. 3,000 plus a full year of what?
2,500.
Plus 6 months of what?
4,000.
So I've done all that. And so I'll give you 3 minutes to copy. I'm going to open everything for you to copy up to the group structure first. Then the rest are simple. Getting the group structure right is what the problem is. So you can start from here. Yes. So please start from here. So start writing. Write this before we continue. Whole group. I'm giving you the chance to copy. So please copy. Whole group. So copy this before we continue. Are you writing? Are you writing?
Yes.
Yes. Copy this before we continue. You know, income tax. What was the income tax? 9,500 plus a full year of 4,500 plus 6 months of 6 months of 2,500. So last night, you will now understand why they struggle. How can you be writing exams and such a complex question? You will be solving it at the same time reading the question. It will take 2 hours. Take your summary down. When you take your summary down, do you see that when we took our summary down, we'll be able to see that it will be a subsidiary for 6 months and associate for 6 months. Is that clear?
Yes, sir.
So, sir, please, the summary, will we have to do it in the question paper or maybe the answer booklets?
Anywhere you do it, it will be marked. If you do it in the question, if you do it in the question paper, the examiner will skip it and mark your working. If you do it in the answer booklet, it will be skipped and will mark. Anywhere you do it, it will be marked. But sometimes, look, sometimes examiners advise students that you should do your rough work at the back. But this is something you will need to refer to. So if you do it at the back of the answer booklet, it means you have to be going back and forth. Are you getting the point? Are you getting the point?
Yes, sir.
It means you have to be going back and forth. So I would advise you that do it inside the question paper. Write everything there because you will be referring to it. So write it there and refer to it and do your work. Write it there neatly and refer to it and do your work. It is part of it. After all, if I am writing exams and I prefer to spend 20 minutes analyzing my work, is that a concern of the examiner? Is that a concern of the examiner?
No.
The examiner's concern is to mark the workings you have done, which is correct, yes. But I need this information to help me. So put it on the paper, put it on the answer booklet and follow it. Because if you are now going to write it at the back before coming back, doesn't mean at the time you are working, you will now be flipping to the back and forth. All of that, you are wasting time. Put it in the answer booklet right in front of you and go ahead and solve. Please, are you finished with this page? Have you finished with this page? Hello? Oh, today the response rate is very, 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 very poor. More than 2/3 are silent today. More than 2/3. I'll start mentioning the names. I will embarrass you. Alasa
Yes, sir.
Shaib, Benjamin, Daniel Busumpe, Da, FG, iPhone, Lauren, Ogatimi, where are they? Roland and the rest. Shaida Korti, Philippa Megache. You've all muted yourself. Does it mean you are not part of the class or you've joined and you are still sleeping? Please, have you finished this page?
Yes, please.
Yes, sir.
Yes, we are done.
So finish it up. 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 Are you done? Are you done?
Yes, sir, you are done.
Okay, so your workings start. Write down your summary. Take your time. Write everything. Oh, don't leave anything. Write everything. Don't leave anything. It's for your own good. Write every. Do the work exactly how I've done it. If you want to score, sweep the marks. So take your time and write your summary first. Your workings. Yes. Go ahead. When you are writing this, the facts, leave some lines between the facts so that it will come out clearly for you.
You mean the summary?
Yes. I mean, there's something when you're writing the facts, for example, who acquired 60% of Sunyani on 1st October 2016, cash 40,000, net assets this, and NCI this, share capital and retained earnings and other components, then excess is non-depreciable line. At least after that whole statement, leave a line before you write the good rule, because it's another fact. All this is one fact. Then leave a line before you write the good rule. That good rule at 30th is impaired by this. Then you also leave a line before you write the whole dispose so that you see them clearly. Are you getting it?
Yes, sir.
What I mean is that after this, all this is one fact. All this is one fact. After that fact, leave a line before you write this. When you finish, this one too is another fact. Leave one line too before you write this. It's also another fact. And you get it. Can we move on?
Yes, sir.
Please, I'm hearing only one person. The rest, can we move on?
Yes.
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
Yes, finish this one too. Then leave one line, write that of the Kumasi too. So the Kumasi too, the whole of this is one fact. The whole of this is one fact. When you write it, leave a line and take this one to another fact, leave a line, and then it's the third fact.
So place the date of control for
Are you done?
I can see it clearly.
You see,
Date of control for Kumasi. Is it first of I
date
can
of
see
control.
Yeah.
1st October 2018. 1st April 04 April. It's April 04. Now, after this particular question, our next question will be one more statement of financial position. Then we come to consolidated statement of cash flows. There are some past questions on cash flow. Once a while, and to my surprise, consolidated statement of cash flow is the easiest thing you can find in this world. It's the easiest console you can find in this world. Interestingly, when they examine it, then trouble. Then anytime they examine different, once a while, then they push consolidated cash flow in, it throws all the students away. I don't know whether so. Let me do you a favor. Before I solve the consolidated cash flow, I'll teach you how to prepare the cash flow statement itself. Is that clear?
Yes,
Hello?
sir.
Before I do the consolidated statement of cash flow, I'll spend time to teach you how to prepare the cash flow statement itself. You have to know how to prepare the cash flow statement itself. Then you apply it in the consolidation. That will make it easy for you to understand. I think that's the problem because the statement of cash flow is taught at level 2. So those who come from level 2 who have done FR, they might have treated how to prepare a statement of cash flow already in FR. So when they come to level 3 and you are showing them consolidated cash flow, they are able to follow because the real cash flow itself, they know how to prepare it already. But unfortunately, those who are in level 3, most of you might have come with a master's. And so you didn't write FR, you wrote only perhaps public sector and the final level. So your preparation of financial statement may not be too strong at the master's level. So because it was not too strong, I'm sure that is where the problem comes from. The students find it difficult because even the cash flow statement, they can't prepare it. How do you tell them to consolidate? If the person cannot even prepare the statement of cash flow, how then do you tell the person to consolidate? I have investigated and realized that is the problem because so many students I have come into contact with have realized that they do not even know how to prepare the statement of cash flow. So asking them to consolidate and even interpretation when they give you statement of cash flow to interpret, asking them to consolidate and interpret becomes a problem because the thing itself I can't prepare it. How then do you tell me to consolidate? So to safeguard you, I'll find one day to teach you how to prepare the statement of cash flows first. When you understand that, then we apply it to the consolidation, then you are fine. Because if you ask me, if I'm the one writing the paper this time, I'll make sure that I'll master cash flow before I sit down. If you ask me, that is what I'll tell you. Are you okay? Please, are you okay with this?
Yes, sir. Thank you.
So under it, put down this and that, then let's solve the rest. So easy. If I'm the student sitting for the paper this night, I'll make sure before I go to the exam, so I know how to prepare statement of cash flow very well. Because, last night, a P&L, it's very likely you can have a statement of financial position, which is a complex group, or a statement of cash flow, or foreign subsidiary. So clearly, this diet, the console is going to revolve between three things: either a complex group with these issues, or you are going to have statement of cash flows, or a foreign subsidiary. So if I were you, that doesn't mean P&L cannot come again. They can repeat it again. But as a wise student, what I'm saying is that they can repeat it again. But as a wise student, it will not be prudent to sit for the paper if you don't know complex groups, you don't know cash flow, you don't know foreign subsidiary, because P&L has already been examined. So if you understand the P&L, master these ones in addition and go and sit down, knowing that however console they put, you'll be able to triumph. Can we go ahead?
Yes,
So now working 2, we will then need to calculate the net assets, right? We will then need to make net assets list. So let's see. Let's make net assets of Sunyani. Just solve the question as if you don't know what it is about. All that you know is that after your group structure, you've been canoeing net assets. So let's do it. At date of acquisition, then at date of reporting. Please, if you finish writing, now pause and drop the pens and watch. I'll give you a chance to write again. So just pause and watch. If you finish writing, drop your pens and watch. I'll give you a chance. You know, I give you ample time to write, right? My interest is for you to understand the thing. So I don't care if I have to give you 20 minutes to write it. That is more important. So for now, you put the pen down and watch. So from the summary you've written, from your own summary you've written, go to the acquisition of Sunyani. From the summary you've written, go to the information on Sunyani. Give me the share capital of Sunyani. From the summary you wrote yourself, give me the share capital of Sunyani. Nobody is responding.
12,500.
Oh, please talk loudly. We are in a class. Come out boldly. Share capital of Sunyani. From the information you collected on Sunyani.
It's 12,500.
So 12,500 at acquisition. 12. Now you are not looking through the question, but you are looking through your own summary. Now retained earnings. Retained earnings. The reported one is what?
30.
30 what? Then other components. Other components is what?
3,000.
Those are reported figures, 3,000. Now, they gave you the net asset. They said the assets is non-depreciable land, but they gave you the full value of the net assets. What was the net assets? What was the total of the net assets at acquisition? Yes, net assets of Sunyani, they gave you
55,000.
55,000. So you see now your work is moving. Imagine you were looking through the question paper. You walk through and you never find it. Now, so it means that, yes, let's go and calculate the retained earnings at acquisition and then the other components. So let's go to working three. Let's leave this. Let's leave this and go to a working three and calculate retained earnings at acquisition. Retained earnings of Sunyani. Okay. Now, at acquisition, which was 1st October 2016, I don't know how much he got, but then he operated from 1st October 2016 to, they bought him in to 30th September 2018. Now, what is his full year profit? What is his full year profit, Sunyani? Check the P&L. What is Sunyani's 1 year profit? His 1 year profit is what? Sunyani,
11,000.
11,000. So this is a period of 2 years. So if all revenue and expenditure are going evenly, 2 years times 11,000 will give you 22,000. So it means that a certain value at the beginning plus 22,000 gave you the reported one. And then the reported retained earnings, you said it was what? 32,500, right?
Yes.
Right? So you can get this one as a work back. So work back, what will it give you? 32,500 minus 22,000. What is it giving you? What is it giving you? Oh, the whole class.
10,500. 10,500.
You've left the work for one girl. Sorry, one lady. Be careful, she will not take full advantage and you will be behind. The work to your wise is enough. Let's look at the other components too. Other components of Sunyani. You know, in P&L, normally they will tell you should assume all items of revenue and expenditure accrue evenly. So let's make that assumption that, yes, at 1st October 2016, we didn't know what the other components was. But after operating for 2 years, up to 30th September 2018, After operating for 2 years, give me its other comprehensive income. Other comprehensive income.
30,000.
It was what? No, it's other comprehensive income for Sunyani.
Sorry.
It
The other
didn't have.
comprehensive income for Sunyani Sunyani doesn't have. Sorry.
It doesn't have. So let's assume
Yes.
it's the same as the parent. It doesn't matter. It will not affect us. So you are making an assumption. So the parent's own was what? 5,000, right?
Yes.
So let's
Yes,
assume you
please.
write your assumption down. Gives you what? 10,000. I'm just trying to demonstrate something to you that all this will not affect your solution anyway. And then the total give you what is the other components at reporting?
That's the
What is
30,000.
at reporting was what? Is it 3,000 or 30,000? 3,000 from the net assets here. You give me 3,000 here. Watch, you give me 3,000 here. Can you see?
Oh yeah, I think I missed it there. So it's
So 3,000. So if I should work back, it becomes what? 3,000 minus 10,000, right? Giving you what? 7,000. Are you getting it?
yes.
So this, I'm doing this is what I'm doing. This does not affect your solution in any way, but because I'm teaching you comprehensively, I want you to see how the thing looks like. The assumption I've made is that one, all items of income and expenditure, all items of income and expenditure accrue evenly. I'm assuming they all accrue evenly. So the profit is the same for 1 year. So for 2 years, I can multiply. Then I'm also making an assumption that other components of Sunyani equals that of O Limited. This is the assumption I'm making, that assuming they are even the same, this is what I'll make. So acquisition for retained earnings is 10,500. Other components is 7,000. So if I put this here, 10,500, and I put this here, 7,000. At the end of the day, subtract this back and let's see the land. Subtract this back and let's see the land. Subtract it back and let's see the land. 55,000 minus 12,500, 10,500, 7,000. What is it giving you? This is a negative. This was a negative. So subtract back and let's see. 12,500 plus 10,500 minus 7,000. I'm getting 39.
Same here. I have 39,000.
Is it 39,000?
Okay, there are no zeros up.
What about this? So it means that the land is 39,000. Should I put it here as 39,000? I can get this one. 12,500 plus 32,500 plus 3,000 plus 39,000. Giving you what? 87,000, right?
On
Right?
it.
Okay. So this is what I've done for net assets. Let's move on. You exercise patience. I'll give you the chance to write. So working 5. Yes. Now goodwill. Goodwill. Let's calculate the goodwill. Goodwill. Let me put Sunyani at one side because all the two of them at the time they were subsidiaries. So Sunyani and Kumasi. Now, how do we calculate goodwill? Cost of investment, right?
Yes.
What was the cost of investment in Sunyani? Go to the information on Sunyani. At the time they bought Sunyani, how much did they pay?
They
Go
paid
to
a
your
catch up.
summary on Sunyani. When they bought Sunyani, what cash did they pay? Please, I expect 4 or 5 people to respond to me. The class is becoming dull. If you leave the thing for one person, I'll struggle to get the information. All of you must respond. Please, I need 4 to 5 people to respond. My people, all of you have muted yourself. It's not right. I mean, if you slow me down, it will affect you. Please, everybody should unmute himself. Everybody should unmute himself and contribute. I'm watching it. I want to see everybody unmuted. I want to see everybody unmuted. Yes, give me the figure. When they bought Sunyani, how much did they pay?
40,000.
And then go to that of Kumasi. When they bought Kumasi, how much did they pay? When they bought Kumasi, how much did they pay?
35.
35,000. I'm doing this to tell you that your summary will give you the results quickly than the question paper. Now, NCI at acquisition. The two of them, check their NCI. When they bought Sunyani, how much was the NCI?
22.5.
22.5. When they bought Kumasi, how much was it?
14.
You see now it's moving fast because you have the summary. So this is the 100% consideration. Add it for me. This will be 62,500. And then this will be 49,000.
49,000.
Now give me their net assets at acquisition. It was given to you. Net assets at acquisition.
55.
Sunyani is 55,000.
And then Kumasi is what?
80 something.
33.
Kumasi is what?
43.
43,000.
43.
So at the end of the day, goodwill at acquisition here is what? 7,500. And this is what? 6,000.
6,000.
Now read on the impairment. Sunyani, it has impaired by what?
20%.
20% of this.
So 20% of what? 1,500, right?
1,500.
And then they said Kumasi has not impaired, right?
So this will be 6,000.
And this is also what?
So this will also be 6,000.
Now, they said the impairment has been reversed. Calculate that. Watch. Please listen carefully to this. Now, there are two types of impairment. We have impairment on assets. You know that. Impairment on assets, when you compare the carrying amount of an asset to the recoverable amount, and you get impairment, as in IAS 36. Are you getting it? That one, you can reverse it. Impairment on assets, it can be reversed. But impairment under business combination, IFRS 3 goodwill. In business combination, the goodwill that is acquired, it cannot, the impairment, you cannot reverse it. Impairment on goodwill, you cannot reverse it. Are you getting the point?
Yes.
It is impairment on assets that can be reversed, but impairment on goodwill cannot be reversed. So that reversal they've done, we need to cancel the reversal. Is that clear?
Yes,
So
sir.
you come here and say working 6. Now the reversal of the impairment, so cancellation of the reversal. So I'll say cancellation of the reversed impairment. Cancellation of the reversed impairment. Impairment on goodwill, you can't reverse it. So since they have reversed it, you need to cancel. Now, they first did a reversal. The reversal, the impairment, from here you can see that the impairment was 1,005, right? Therefore, if they reversed it, it means they reversed it by adding 1,005 back. Is that right? Is that right? Hello?
Yeah.
Yes.
I'm saying that the impairment was 1,005. So if they were reversing it means it was the 1,005 they reversed. And you know impairment is a cost. So if there is an expense of 1,005 and they were reversing it, it means they added an income of 1,005. Is that not it? Is that not it? You bring that reversal of 1,005, and they said there was an additional increase of what? 1,000. So there was a further increase of 1,000 again. When you add it to it, it becomes 2,500. That means that the total increase they put there is 2,500. You need to reverse this 2,500. Now, this 2,500, where did they record it? Read the question. They told it was recorded in other income. Can you see? From the summary, look at the summary. They told you they recorded this in other income. Look at it. Look at it. They said the impairment have reversed. Goodwill also valued upwards by 1,000. So read the question. They told you it was reversed in other income. Where that reversal is, read the question from there. You will see. Can you see? Can you see it?
Yes, sir.
Yeah.
Where the goodwill was, they said this upward change has already been, look at it, the goodwill, where is, yes. Yeah, they said goodwill has been tested for impairment And then this, however, the impairment of goodwill has been reversed and valued at 1 million above is the upward change in value has already been included in the draft statement. Okay, they didn't tell us. But then what I want to mean is that this is an income. This 25 is an income. So if it is an income in the financial statement, this is the financial statement. What the financial statement? This is the financial statement. So if they have an income of 10,000, then it means that they would have put in it here in other income. Are you getting it? Are you getting the point?
Yes, sir.
Since there is other income here, that is where they would have recorded this. So to reverse it, you will come and say you have to recognize. So to reverse this, you need to recognize an expense. So we recognize a corresponding other expense. Since they put it in other income, we recognize a corresponding other expense. You recognize the corresponding other expense of 2,500. Do you understand it now? Please, do we understand?
Yes.
So we'll go to other expense. We'll go and add 2,500 when we are reporting. Let's go ahead. Let's go ahead. Working 7. Now, Sunyani, again, what did they do? They disposed equity interest, right? Be looking at your summary. From your summary, you can see they disposed equity interest in Sunyani here. After the goodwill, we went to disposal. Can you see? We've done all this for the net asset. We've done this for the goodwill. After the goodwill, they went to disposal. Can you see they went to disposal?
Yeah.
So we treat a disposal. So let me say disposal of the 8% interest in Sunyani. Now, if you are disposing of an asset, what do? You compare the carrying amount to the cash proceeds, right? Right?
Yes.
So the carrying amount, of the disposed interest. Now, that thing, the whole 60% was representing how much? The man was controlling 60%. At that time, the 60%, you know, what is it? It was 47,500. The carrying amount of the investment, look at it. They told you that the carrying amount of his investment, look at it. Come to where the information is. Look, he disposed it on 30th September 2018. Can you see?
Yes.
So if he disposed it on 30th September 2018, at that date of 30th September 2018, how much was the investment? Can you see it here? The carrying amount of the investment was 47,500 at 30th September 2018. Can you see it here?
Yes.
Yes.
Good. So it means that the 60% was representing 47,500. So what we mean is that if 60% is equivalent to 47,500, then the 8% you sold will be equivalent to less. If less, more divide. So 8 over 60 times 47,500. Do we understand? Do we understand?
Yeah.
Good. So what it means is that the 60% is 47,500. So if we are taking 8% out, it means 8 over 60 times 47,500. What would that give you? What would that give you?
$6,333.33.
6,333. Then you compare this to the sale proceeds. So the sale proceeds, they say he sold it for how much?
For 9,000.
He sold it for 9,000. So if the person sold it for 9,000, what has happened? This is what? A profit on disposal, right? Right?
Yeah.
So a profit of how much?
667.
667. Now, this profit on disposal, what would he have recorded? He would have recorded it in other income. Is that not it? Is that not it? But then, if you dispose of interest and you don't lose control, now listen, the basis for consolidation is control. So if you dispose of and you don't lose control, you must not calculate any profit or loss and recognize it. Is that clear? Is that clear?
Yes, sir.
Once you dispose, anytime you dispose interest and you don't lose control, you remember when he disposed the 8% here, he still had control of 52%. Do you remember?
Yes.
So it means
Yes.
that the disposal did not result in loss of control. So he is not supposed to do this profit on disposal at all. But here is the case, he has done it and he has recorded it in other income. So what must we do? We have to reverse it. Is that right?
Yes.
Good. So you say that now, let me explain. Where a disposal, because you will be revising, I'm explaining, where a disposal does not result in loss of control, where you dispose and it doesn't result in loss of control, no profit or loss on disposal must be recognized. You don't have to recognize any profit or loss on disposal. Now, here is the case, he has recognized it. So what do? We need to what? Reverse. Are you getting it? Hence, the profit of 2667, which might have been recognized in other income, must be what? Must be reversed. And how do you reverse it? You create a corresponding other expense. Are you getting an understanding? So you reverse it by recognizing a corresponding other expense. By recognizing a corresponding other expense. So you create other expense of 227 to reverse it. Is that clear? Is it clear? Are we okay?
Yeah.
Yes, sir.
Good. Now let's go to Kumasi 2. That one too, there was a disposal. Let's go and treat the disposal in Kumasi 2. Let me call it working 8.
Please, I have a question.
Disposal of 40% interest in Kumasi. Yes,
Sir, please, I have a question.
Yes, go ahead.
Yeah, we are creating a corresponding other expense to reverse the transactions. Yeah, I want to ask, what if like you
subtract it from the other income?
From the other account, we begin
It's
to
also
the same.
correct. It's also correct. Let me say or deduct. You can decide to deduct the 2667 from other income. It's also correct.
All right, thank you.
Anyhow it is, you can decide to create other expense or you deduct it back from other income. It's also correct. This tells me that you are following. You see, there are some questions when a student asks, it tells you that he is really following what is going on. Okay, so disposal of 40% interest. Now, when he disposed this 40% interest, he lost control, right?
Yes.
Right?
Yes.
So since he lost control, it means we have to calculate the profit or loss and now recognize it because there is a loss of control. Are you getting it?
Yes, sir.
You see, losing control and not losing control is like you have a mobile phone. You sold the mobile phone to somebody, yet you are still maintaining control of it. You are still using the thing. Do you remember that IFRS 15, revenue from contract with customer? Hey, let me come back to standards. IFRS 15, revenue from contract with customers. Do you remember it taught you that if you have sold something to somebody, but you are still maintaining control of that thing, you can't recognize the sale, the profit. Is that not it?
Yeah.
You only recognize the profit if you have given the person absolute control. True or false?
True.
Good. So we are saying that the first one, you sold as an asset to somebody, but you are still maintaining the asset and you are using it. It's like a sale and lease back. So you cannot recognize that profit. But in this case, you sold the thing and you've lost control. That means you've given the whole thing out. So now you can recognize a profit on disposal. Are you getting it?
Yes.
Good. And this is how you recognize that profit. you will record the profit as if the whole thing has been sold. Remember, the basis for console is control. So the moment you lost control, it's assumed that you've lost the whole company. Are you getting the point? So the whole company is the one you dispose plus the one that is left. It's like this. If I have something which is worth 100,000, what this? I have something which is worth 100,000, and then I've sold 60,000 out of it. It will be left with 40,000. But we are saying that value the whole 100,000. So you value the 60,000 you sold, then you also value the rest of the 40,000 at market value to get the full market value of the 100,000. Is that clear? So what we are saying is that you take the proceeds of the disposal. The one they disposed is already in fair value. How much did they dispose it for? How much did they dispose it for? Look at the disposal in Kumasi. How much did they dispose it for?
For 30.
Look at the information. Disposal of Kumasi. When they disposed, how much did they collect? For a cash process of how much?
35.
Is it 35? Is it 35? When they disposed of Kumasi, here.
20.
For a cash of what? 25,000. You can see it here. They disposed it for a cash of 25,000. Can you see?
Yeah, 25,000.
Good. So they disposed it for 25,000. So the one they disposed was 25,000. Then the remaining interest, you also fair value that. So fair value of the remaining interest. The one that is left, what is the fair value? They gave you over there. The one that is left, its fair value was what? Yes. The remaining interest fair value is what? 20,000. Can you see it here? Can you see it here?
Yes, 20,000.
Good. So the remaining interest, its fair value is 20,000. That means that the whole thing was valued at what? 45,000. So this is the fair value of the whole investment. So the whole investment, its fair value is this. Now you have to compare it to the carrying amount. So let's compare it to the carrying amount. You know, anytime you are selling something, you compare the carrying amount to the fair value, right? So carrying amount of that investment, let's see. Now, when he bought the company, the parent, when he bought the company, he bought net assets and he also bought goodwill, true or false? Anytime you buy net assets and goodwill, true or false? So it means that the whole group is made up of net assets plus goodwill plus the NCI. Is that not it? Is that not it?
Yes.
So now, if you want to find out what the carrying amount of the net assets is, it means what must you take? You must take the net assets at the disposal date, the net assets at the disposal date plus the goodwill. Then you take out the NCI. The one that will belong to the parent will be net assets plus goodwill minus the NCI. Is that clear?
Yes.
So the net assets at disposal. Look at that same information. At the time they disposed it, what was the value of the net assets? What was the
It
net
was
assets?
45,000.
Excellent. 45,000. This is the reason why I asked you to take the summary. Then the goodwill. What was the goodwill in Kumasi? Goodwill in Kumasi, it was 6,000, right?
6,000.
6,000. So this is the whole company, the net assets and the goodwill. But NCI is part of it. So we want only the one that belongs to the parent. So we must take NCI out. So NCI at disposal. Please, do you understand why we are taking NCI out? Do you understand why we are taking NCI out? The whole company, watch, the whole company is made up of this, the net assets and then the goodwill. The whole company is made up of this. So this is the whole company, net assets plus goodwill. But we don't need all the company. We need only the one which belongs to the parent. And then the whole thing is parents plus NCI. So if we need the one that belongs to the parent, we have to take the NCI out. Is that clear?
Yes.
So NCR at the date of disposal, how much is it?
17,000.
Excellent. You see the advantage of taking your summary, 17,000. When you net this off, what will it give you?
That would be 34,000.
So you take that 34,000, that means I've compared the carrying amount, and then the fair value. This is the fair value at the top, 45. The carrying amount has also given us 34,000. At the end of the day, yes, the profit on disposal is what?
11,000.
Yeah, constant.
How much is the profit? 11,000.
Yes, sir.
So now, since there is loss of control, this profit, must we recognize it or not?
It must be recognized.
It must be recognized, but they have not recognized it. So now you will go and what? Recognize it. You see what ICA is doing? Where they are not supposed to recognize, they will recognize to see if you can de-recognize it. And where they are not supposed to, they are supposed to recognize, they will not recognize to see if you can recognize it. Are you getting the point?
Yeah.
So the explanation is that where disposal results in loss of control, where a disposal results in loss of control, a profit or loss on disposal must be computed as above, as I have done above, and recognized in P&L. So if we have to do this, then it means that what? Now we have to recognize 11,000. Hence, a profit on disposal of 11,000 must be recognized. Must be recognized in the P&L. So when we are going to report, when we go there, we'll record a profit on disposal of 11,000. Are we okay?
Yes.
Good. Let's go to working 9. Now we've tackled all the issues that has to do with the acquisition and disposal. So now you can read the rest of the footnotes.
Sir, please, I have a question in regards to the fair value of the remaining interest, the 20,000.
Good.
I didn't know how you came by that.
Oh, it has been given to you in a question.
Okay. Thank you.
Look at the summary. Look at the summary you took. They told you that the remaining interest is fair valued at 20,000. Can you see? Look at the summary you took for Kumasi.
Okay.
Have you seen it?
Yeah, I've seen it.
Good. Now read the rest of the footnotes. Now we finished all the disposal issues. So now the rest is unrealized profit and the things you know. So go ahead and read it. Yes. Now read for us the footnote number 3. Now from the unrealized profits.
Okay, so who sold inventory to Sunyani for 6 million at fair value? Who made a loss on the transaction of 1 million?
Hold on.
Okay.
So who sold to parent, sold to subsidiary? What was the sale? The sale amount was what? The sale was what? 6 million.
6 million. Yeah.
And then he made a loss of what? 1 million. At a loss of what? 1 million, right?
Yeah.
Right?
Yes.
Continue reading. Let's see the closing inventory.
Okay, so who sold inventory to Sunyani for 6 million at fair value? Who made a loss on the transaction of 1 million? And Sunyani still holds 4 million in inventory at the year end.
Okay. So the inventory, closing inventory was what? How much of the inventory was left? They said 4 million.
Yes.
Now look at this. Under normal circumstance, we should have calculated the unrealized profit on the 4 million, but this is a loss. And then the financial statement you are preparing, we prepare the financial statement on the basis of what we call prudence concept. Is that right?
Yes.
And the prudence concept says that you should be careful as an accountant, be careful not to overstate profits. And so in order not to overstate profit, you have to recognize transactions in the financial statement to the extent that they will result in losses rather than profit. Is that clear? Is that right?
Yeah.
Hello?
Uh,
I'm coming back again. I'll call you. I'll call your names. That is my
Yes,
nature of
sir.
chat.
Yes,
If I
sir.
don't hear from you, I will embarrass you. Yes. Who is Da? Jocelyn and the rest. Jocelyn, Da, Mary Jamina,
Yes,
Mary
sir.
Jamina, Moses, Philip Amegache, Shaida Kote, Osea Komeni, and Ko. They are all quiet. Where are they? I need responses. I am saying that the prudence concept says that accountants, you must be careful not to overstate profit. And so in preparing the financial statement, you need to exercise a high degree of caution so that you recognize transactions and events in the financial statement to the extent that they will result in losses rather than profits. Is that not it?
Yes.
Yeah.
So here, there is an unrealized profit. Here, it is rather a loss, which means they have recorded a loss. Now, you yourself, the financial statement you are preparing, you are supposed to prepare it in order not to overstate profit. So you are supposed to recognize losses rather than profit. And here is the case, the person has already recognized the loss. Do you go and cancel the loss?
No.
Do you go and cancel the loss? Very good. So if it was a profit, you would have calculated unrealized profit and go and take it out by adding it to cost of sales because you don't want to overstate profit. Are you getting the point?
Yeah.
But since it is a loss, that is what you are rather interested in. The prudence concept says you must rather anticipate losses than profits. So once it's a loss, you don't tackle it. So what you do is that you say the loss shall not be reversed. So that loss, you don't need to reverse it due to what? Due to prudence. So due to prudence, you don't have to reverse it. So you leave it as such. But the intra-group sale of 6,000, that one you treat it normal in sales and cost of sales. Are you getting it?
Yeah.
So however, the intra-group sale of 6,000 shall be eliminated. That one, your normal treatment of intra-group sales, you eliminate it as usual. But the unrealized loss, you leave it. If it was an unrealized profit, then now you do what? You calculate the profit. So if it was an unrealized profit, what we'll say is that a sale of 6,000 is equivalent to a loss of what? 1,000. Therefore, a sale of 4,000 will be equivalent to less. If less, more divide. Then you say 4,000 over 6,000 times 1,000. Is that clear? This is what you would have done to get a profit. And then you go and reverse it by adding it to cost of sales. So that's the trick. But once it is a loss, already you are anticipating losses. So if the thing itself is a loss, you don't go back and reverse the loss. So unrealized losses, this is how you treat it. You don't touch it at all. Let's go to the next footnote.
Okay. A minute.
Hey, please
On
hold on. When we did this disposal, yes, when we did this disposal, we are supposed to do the current year gain. The current year, there was a gain. Look at the information on Kumasi. Look at the information on Kumasi. Watch the information of Kumasi here. Here, the information of Kumasi. Here. You can see clearly here. Sunyani. They said the current amount of the investment at 30th September was 45,000. And at 30th September 2018 was 47.5. So between this 1 year, there was a gain. And that gain, they say, is recorded in other comprehensive. Can you see? They said current amount of the net assets, as you see, gain or losses are recorded in OCI. Can you see? From here, they said gain or losses are recorded in OCI. Can you see?
Yes.
So you have to calculate the current year gain. So let's calculate the current year gain. So let me say current year gain on investment In what? Was it Kumasi or Sunyani? Was it Kumasi or Sunyani? Who was that? Was it Kumasi or Sunyani? In Sunyani? In Sunyani. You remember the Sunyani? The Sunyani.
Can we number the workings as 8I so that we'll know it's related to the 8? Maybe in revising.
Okay, so this is what I'll do. Let me go back to the 8. Let me go back to the 8. Where is the working 8? 8. Okay, so let me say 8A and then 8B. Exactly.
Okay, thank you.
So 8A, so that you know that's a smart one. So that you know it is related to the 8. That's a smart one. People make wild. Now it will be So 8B. Current year gain on investment in Sunyani. So the fair value at 30th September 2017 was 45,000. But by 2018, it has become 47,500, right?
Yes.
What is the gain there? What is the gain? Fair value gain. And they said they recorded this in other comprehensive income. That's 2,500.
500, yes.
So the 2,500, they've recorded it in other comprehensive income. So we have to do what? We have to reverse it. Are you getting it? Remember, it's intra-group. Reverse the intra-group. Remember, it's intra-group. It happened during the post-acquisition period. So intra-group, fair value gain of 2,500 from what? OCR. Are you getting it? Are you getting it?
Yes, please.
It happened during the post-acquisition period. So it is intra-group. So you have to reverse it from OCI. Okay. Let's go on the next footnote. The next footnote, I think there was a standard.
On 1st October 2016, we purchased an item of property, plant, and equipment for 6 million. And
So
this
that's
is
PPE. Watch. So that's PPE. So after giving you a lot of frustrations, they give you some small PPE to cool down your temper so that you don't curse. They give you small PPE to cool down your temper so that you don't curse. So 10. Property, plant, and equipment. As for PPE, the basic standard, I think everybody knows it. So property, plant, and equipment. Yes, read. He said they bought what? Read.
Sorry. On 1st October 2016, we purchased an item of property, plant, and equipment for 6 million. And
So
this is being
Mm-hmm.
and this is being depreciated using a straight line basis over 10 years.
Hold on. So depreciation is over 10 years. So 6,000 over 10 years, giving us 600. Go ahead.
Basis over 10 years with nil residual value. At 30th September 2017.
So hold on.
Okay.
So that means they used it for 1 year. They used it for 1 year. So the carrying amount at 1 year after this 30th September 2017 became what? 5,400. Read. Continue reading.
At 30th September 2017, the asset was revalued to 6.5 million.
Hold on. So it was revalued on 30th September 2017. The revalued it was 6.5, right?
Yeah.
So what would this result in? It will result in a revaluation gain. So a revaluation gain, which they will have charged to other comprehensive income of how much? 1,100. Go ahead.
But at 30th September 2018, the value. Okay.
Hold on. So they used it again up to 30th September 2018, right? So it means it will depreciate again. They used it again up to 30th September 2018. So this time the depreciation will be this over remaining useful life of 9 years, right?
Yeah.
Now the remaining useful life is 9 years, right?
Yes.
Calculate that depreciation for me. Calculate that depreciation for me. Calculate for me
722.
So 722. So what will be the carrying amount at 30th September 2018?
5778.
9778.
No,
No, it's
5755.
5, okay.
Yes.
As for questions like this, when you meet it in the exam hall and you skip it, then your own wara 5778. And they said what? At that date, what happened?
The value of the asset had fallen to 3.5 million.
So the recoverable amount at that date, it has fallen to what? 3 point what?
5 million.
3.5 million. So what has happened here? What has happened here? Hey, my people, you don't need 2 seconds to respond to this. What has happened here?
There's a loss.
And people, what has happened? Hey, I wish it was a face-to-face and I had some fame. Revaluation loss.
Revaluation loss.
Revaluation loss. What do we call a revaluation loss? It's an impairment.
Impairment.
Yeah.
I wish it was face-to-face and I had a key.
Impairment.
So that is an impairment. So impairment of how much?
2278.
2278. Now, what is the examiner examining you? An asset was revalued previously, they got a gain. Later, it became impaired. What do you think the examiner is examining? Hey, in the last question I saw with you, there was a similar thing. Have you forgotten? An asset was revalued previously and it resulted in a gain. Then later, the same asset had an impairment. You don't know how to treat it?
Yes.
Who can tell me this? I'll send you something privately. Who can tell me this?
Please, the question again.
The question is on the board. You can see the thing was revalued and you got a gain. Then later, the same asset impaired. What must you do?
So you deduct the impairment.
You net off the impairment against the revaluation gain.
Earlier, yes.
You net off the impairment against the revaluation gain. That is all. So what the examiner, Na and Co, all those who joined the previous discussion in November 2018, do you remember we saw the same thing?
Yeah.
Do you remember we saw the same thing, revaluation and impairment? Are you okay?
Yes.
So it means that under it, you will say revaluation gain versus impairment. Now, what was the total impairment? The total impairment was 2278. Out of this 2278, we will reverse the previous gain. So the previous revaluation gain, which is in OCI, it was what? 1,100. So when you reverse it, what will be the excess impairment, which you will send to P&L? What will be the excess impairment? Yes?
1178.
1178. So the explanation is that now where an asset is revalued, resulting in a revaluation gain, the gain is recognized where? Is recognized in OCI, right? Any subsequent impairment any subsequent impairment on the asset, any subsequent impairment on the asset shall be used to offset the previous gain. Use it to offset the previous gain. Use it to offset the previous gain in OCI to the extent of the gain. To the extent of the gain. Then the excess impairment,
Sir, please, are we supposed to be writing all these things in the exams?
No. The examiner who is marking, he understands everything. I'm doing this because you will revise so that you understand what I've done.
Okay, sir.
I'm doing this for you because after today, it doesn't end here. You will definitely go and sit down revising this question. In fact, this question is the most difficult TNL that has been examined in the history of ICA. The whole ICA, since this question is the most difficult TNL that has ever been examined. That's why I'm explaining every step, because after the lesson, sometime later, if not today, tomorrow, or sometime later, you will go and sit down revising it. If I don't put these theories attached to it to explain, you will not understand. Are you getting it?
Yes, sir.
That's why I'm putting, but in the exam, so you understand what to do already. So you just put your answers down and leave. The examiner who is marking, he knows everything. Everything you know, he knows it. So you don't need to explain anything to him. Are you getting the understanding?
Yes, sir.
I'm doing this to guide you so that you don't go and sit down revising. You don't understand what you've learned already. No. Excess impairment is then recognized in P&L. So it means that we will go and cancel 1,100 from OCI. Then we'll add the excess impairment of 1,178 as an expense. So expense, whichever expense you want to put. So I can say, hence, you deduct 1,100 from revaluation gain in OCI. And now, please, the impairment, which expense should we put it in? Impairment, where should we put it? Should we put it in administrative expense or other expense? What do you want? Should we put it in administrative expense or other expense? Wherever you put it is correct. Where should we put it? Please, where should we put it?
Other expense.
Okay. Then other expense. Whether you put it in administrative expense or other expense is correct. So that is it. Yes, read the next footnote. Read the next footnote.
Okay. Vin, on 1st October 2016, WHO made an award of 4,000 share options to each of its 7 directors.
Okay, hold on there. So this is share options. Share options. They gave their directors share options. So let me say directors share options. Directors share options. Yes. Go ahead. They said they gave 7 directors, and what happened? Go ahead.
So on 1st October 2016, WHO made an award of 4,000 share options to each of its 7 directors. The condition attached to the award was that the directors must remain employed by WHO for 3 years.
They must remain employed by WHO. Go ahead.
Okay. The fair value of each option at the grant date was 100 cedis, and the fair value of each option at 30th September 2018 was 110 Ghana cedis.
Now, directors option, share option, we have 2 types. What are the 2 types? We have what type and what type? Share options, there are 2 types. We have what? We have equity settled and cash settled. Is that clear? Hello? I said share options. We have 2 types. We have equity settled and cash settled. Is that clear?
Yeah.
Now, equity settled, like in this case, it is measured at fair value at the grant date. Is that clear? And then the cash settled is measured at fair value at each year end. Are you getting it? So they awarded the thing in October 2016. So as at 30th September, so let's say now the value of the option at 30th September 2017, 1 year after, yes, read. How many directors left? Read. Read from there. Now continue reading.
At 30th September 2017, it was estimated as three directors will leave before the
Okay,
end.
so hold on. So at this point, we know 3 directors will leave. So how many directors will be left? There are 7 directors.
4.
So if there are 7 directors, 4 directors will remain. It means 4 directors. Each one is taking 4,000 options, right?
Yeah.
4 directors, each taking 4,000 options. And then we are multiplying it at the grant date. You said at the grant date, the value of the option is 100 cedis. And this is the first year out of 3. So times 1/3. Calculate that for us. 4 directors taking 4,000 options valued at 100 cedis for the first year. I'm getting 533,333. Remember, we are working in thousands. So 533, right?
Yeah.
Remember, we are already working in thousands. Are you okay?
Yeah.
Then go ahead. Next year, let's value the option. Go ahead.
Due to an economic downturn, the estimate of directors who were going to leave was revised to 1 director at 30th September 2018.
So hold on. So at 30th September 2018, when they revised it, they realized that only 1 director will leave. So how many directors will be left? 6 directors, each of them taking 4,000 options, valued at the grant date of 100 cedis for the first. This is what, second year?
Yeah.
So for the second year, 2/3. Calculate that for us. 6 directors, each taking 4,000, measured at 100 cedis. 1,600, right? 1,600, right?
Yeah.
So what it means is that I have an option at the beginning valued at 533. But at the end of the year, the option value has become 1,600. Increase in an option, yes. Increase in liabilities becomes what? An expense, right? So how much is the increase? It's an expense. How much is it? How much is it? Oh, calculate for me.
1067.
Yes, so now, so what I'll explain is that equity settled share-based options. Equity settled share-based options are measured at fair value at the grant date. So the difference between the option at 30th September 2017 and at 30th September 2018 is an expense. So that expense, where should we recognize it? It means we need to recognize, yes, to recognize an increase in option, that's an expense. Where should we recognize it? Should we put it in administrative expense or other expense? Should we put it in administrative expense or other expense? Please tell me so that you will follow. You are going to write. So should you put it in other expense or administrative expense?
Other
Hello?
expense.
Okay, so let's put it in other expense. In other expense. That is it. So is the footnote finished?
Yes.
Okay, so if the footnote is finished, now then associate. Let's calculate the profit from the associate. You know, one of them changed to an associate. So let's calculate the profit from the associate. Let's calculate the profit from the associate, which we will recognize. Who is the associate? Who became the
Kumasi.
associate?
Kumasi.
Kumasi. And then Kumasi became an associate from when to when? 1st April, right? From 1st April 2018 to 30th September 2018. Do you remember?
Yes.
So what was Kumasi's profit? Give me Kumasi's profit for the year. Kumasi, give me his profit for the year. Kumasi, what was his profit for the year? 7,500. So 7,500 times, when he became an associate, we owned him 20%, and we have operated as associate for 6 months, giving you what? Giving you what? $7,500 times 20% times 6/12. I'm getting 750. Am I right?
750, yes.
So the question completely solved. So let me give you a chance to write. You wrote from the group structure. So you have done group structure here. You ended here. So write working 2. I'm waiting for you, right? Working 2. Hello, those who are sleeping. It's time for you to do your work, your copying, right? Where are they? Alasan Shaibu, Benjamin, Da, EA, Gloria, iPhone, Jocelyn, Kim, Lorraine. Where are they? Nanama, Dufie, Philippa Begache, Mary, and then Shaida Korti. Unmute yourselves and let me know you are following. Yes, Abdul
Oh, we are
Rafiq,
there.
Daniel
Yeah,
Busumpe,
please, we are
Benjamin
following.
Bapi.
We are active.
You are
We are
following.
active.
Exactly. So now copy. As for copying there, you don't have to sleep.
I
Copy
want
so
to
that
take a
you can
snapshot,
follow.
please, from the start.
We'll take the snapshot, but let those who are writing finish first. Please write your net assets quickly, then I'll move on. Those who are copying, take your time and copy. Take your time and write it nicely. It's 6:10. By the next 10 minutes, we finish. That is it. Go and sit down and then revise it carefully. The next meeting, we'll come and solve one more of the complex group with you, May 2020. When we solve that, then we go to consolidated statement of cash flow.
It's your work the same as Amy's room.
Please, can we move on? Can I move? Can I move?
Yes.
Yes, sir.
Okay, working 3, 4, 5. Write them quickly. These are just things you are copying, so write them quickly. Keke, ni am yoko. Please, are you done with this part? Hello? Hey, hello?
Yes, please, we are here.
Are you done with this part?
Not yet.
Okay.
So please, let's take a snapshot and go and write it.
Okay, so will you like to take the snapshot?
Yes, I think that one it will be okay.
Okay, then let's take it from the beginning. So let's take it from the beginning. Yeah, so first page. Now, those who take the snapshot, when you finish, share it on the page. Is that clear? Then please let me put in the values. Let me put in the values before you take it. Please, if you take the snapshot, then let me put in the values. Hello?
All right.
Okay.
I'm saying that, then let me put in the values.
Okay.
So let's go to our workings and start putting in the values. Now, working one, group structure from here. Working one, group structure, we have already used it. Working two, net assets, we don't need anything there. There is no income or expense there. Working three, retained earnings and this, we used it to fill the net asset. Working five, goodwill, we don't need anything from here. But then, now the cancellation of the reverse impairment, I said to reverse this, you need to recognize a corresponding other expense of 2,500, right? Right? So let's go to other expense and put there 2,500. So other expense. Which working number is it? Please follow. Follow. Don't just take the snapshot. Follow. Which working number was it? Working 6. We are reversing this by recognizing other expense of 2,500. So let me go to other expense. Where is other expense? Yes. So other expense 2,500. So plus 2,500. Let me put working 6 on top so that you can see. Let's go ahead. Then disposal of 8% interest, what happens? It says what? We should deduct 2,667 from other income. Can you see? We are deducting 2,667 from other income. So let me go there. Other income and deduct. What is other income? And deduct 2,667. So 2,667. That's working 7. Are you following?
Yes.
Are you following?
Yes.
Then working 8. Yes, it says what we should recognize, hence a profit on disposal of 11,000 must be recognized. So let's go and recognize profit on disposal of 11,000. Yes, so let me put that profit on disposal of 11,000. Profit on disposal. Working 8. 11,000. Are we following? Are we following?
Yes.
Hello, are you following?
Yes, please.
Working 9. The unrealized loss will not eliminate it, but the intra-group sale of 6,000 will eliminate it. So let's go. Intra-group sale is a sale to one person and a purchase to the other person. So let's go here, minus a sale of 6,000, working 9. And then here to minus a sale of 6,000, working 9. I've taken the intra-group sale out. Are we getting it? Have you taken note of the treatment? 8B. It said we should reverse the intra-group fair value gain of 2,500 from OCI. So that's 8B. Let's go to OCI and reverse the 2,500. Yeah, so this OCI 2,500. That was working on what? 10, or working 9. It's 8B, So 2,500. That's working 8B. 8B. I've taken that out. Let's go on. Let's go on. Yes. Working 10. Now working 10 is that what? We should deduct 1,100 from revaluation gain in OCI and recognize excess impairment of 1,178 in other expense. So working 10, we are going to revaluation gain to deduct 1,001. We are going to revaluation gain to deduct 1,001 minus 1,100 working 10. Then they say we should recognize other expense of what? Other expense of how much? 1,178. So still working 10. Let's go to other expense of 1,178. Where is other expense? So let me add. Hey, where do I add it? Where do I add it? Please, I'm not getting space in the other expense. So let me put it in administrative expense. Is that clear? Okay, let me squeeze and put it here.
Yeah, please rewrite this.
Let me squeeze and put it here. Plus 1,178. Working 10. Okay. So operating profit. Okay, I've done that. Then so that's working 10. Working 11. It says what? We should recognize the increase in option of 1,067 in other expense. Working 11. So let's go to other expense 1,067. So other expense plus 1,067 again. Working 11. Then working 12, the last one. The last one, it says what? Profit from associate of 750. So let's go and put a profit from associate of 750. Profit from associate of 750. 750. That is it. So now we can calculate. So please help me with the calculation. Please help me with the calculation. Help me with the calculation so that we can, please help me. 35,000 times 6 over 12. Please help me with the calculation so that we can write it. Plus 200,000 plus 57,500 minus 6,000. I'm getting 269,000. Please be checking my figures. Cost of sales, 18,000 times 6 months, plus 32,500, plus 156,000, minus 6,000. I'm getting 191,500. I'm getting gross profit of 77,500. Yes, so other income. Thousand times 6 over 12 plus 3,500 plus 10,500 minus 2,667. I'm getting 11,833. Administrative cost 6,000 times 6 over 12 plus 4,500 plus 7,500. 15,000. Other expense 4,000 times 6 over 12 plus 7,500 plus 9,500 plus 2,500 plus 1178 plus 1067. I'm getting 23,745. Please confirm for me. This is 17.
Confirm.
It's 17. This is 17. Sorry, 4,000 times 6/12
It's
plus
23745.
plus 9,500 plus 2,500 plus 1178 plus 1067 plus 11. Okay, that's it. It's giving me 33,745. I'm getting 33,745. Check that figure. 33,745. Okay, so 77,500 minus 11,833 minus 15,000. Other income should be positive. What am I doing? Other income should be added and not subtracted. Other income should be added and not subtracted. Are you following? 77,500 plus 11,833 minus 15,000 minus 33,745. Again, 77,500 plus 11,833 minus 15,000 minus 33,745. I'm getting 45,888. That's correct. The solution operating profit is correct. Now finance cost 2,000 times 6/12 plus 1,500 plus 2,500. That's 4,100. 2,000 times 6/12. 2,000 times 6/12. That's 1,000 plus 1,500 plus 2,500. That's 5,000. So 5,000 out as finance cost. Finance income 4,000 times 6/12 plus 2,500 plus 3,000. I'm getting 7,500. Finance income. I'm getting 7,500. Please confirm.
Confirm. Correct.
Profit on disposal, this and that. So let me check. 40,588 minus 5,000 plus 7,500 plus 11,000 plus 750. I'm getting 54,838. Please check the solution if the profit before tax is correct.
Confirm.
Is it correct from the solution? Check from the
Yes.
solution.
Yes, it's correct.
Let me confirm your profit before tax.
It's
54,838.
correct.
If that is correct, then everything is correct.
838.
54,838. Then income tax. Income tax 2,500 times 6/12 plus 9,500 plus 4,500. Now you see when I'm adding, the reason why I'm getting the figures correct is when I multiply the 6/12 one first, I'll get the answer first. I'll punch equal to get the answer before I add the rest. Is that clear? So be careful.
Yes.
When you are doing that, especially when it has fractions. Multiply the one with the fraction, get your answer first before you go ahead with the rest. Okay, so profit for the year 54,588, and that is 39,3. The figure is okay. 54,838 minus 15,250. This is what are you getting? I'm getting 39,588. Is that correct?
Yes.
39,588. OCI 5,000 minus 2,500 minus 1,100. I'm getting 1,400 in OCI. Is that correct? 1,400.
Yes, it's correct.
Plus the 39,588. I'm getting 40,988 at the final answer.
Yes.
40,988. So now let me go and share profit for NCI and then the owners. Please look at this last working and let's close. Please look at this last working and let's close. Working 13. NCI share. You know when you finish, you have to share the profit, right? Profit and total comprehensive income. Please don't relax. So follow this. We finished. You need the screenshot. So follow this to see how this came about. Hello.
Right.
Hello, my people. We are finishing.
Hi.
Okay. So let's put profit for the year here. Yeah, so NCI share of profit and total comprehensive income. What is the profit for the year for the subsidiary, Sunyani and Kumasi? So let me do Sunyani and Kumasi here. Let me put down Sunyani, and then Kumasi. Now give me their profit for the period. Give me their profit for the period. Go to the P&L and give me their profits. Sunyani, his profit should be full. And then Kumasi, it should be 6 months. Please give me the profit. This one is, Sunyani is what, 11,000, eh?
Yes, Sunyani 11,000.
And Kumasi is what? 7,500.
7,500.
But we controlled him for 6 months, giving us what? 3,750, right?
Yes.
There was no unrealized profit, there was no fair value depreciation, there was no impairment on the goodwill. Yes, NCI was valued this one so this will give us what? 11,000. And this one 3,750. Now NCI share. Yes, NCI was 40%. So 40, 40. 40, 40. This one will be what? 400. And then this one will be what? 1,500. Please, are you following?
Yes.
So the total will be 400 plus 1,500, which will give you 5,900. Is that clear?
Yes.
So when we go here, when we go to NCI share of profit and total comprehensive income. Yes. So when we go to NCI share of profit and total comprehensive income, what did the NCI get over there?
5,900.
5,900. 5,900 here. That's working 13. And then total comprehensive income too, it got the same 5,900. The same 5,900, working 13. Now give me your profit for the year. 39,588.
588.
Total comprehensive income 40,988, right?
Yes.
So let's subtract this 39,588 minus 5,900. What is it giving you?
33,688.
40,988 minus 5,900. You said this giving you 40 what?
33,688.
33,688. What about this?
It's 35,088.
35,088. So question fully solved. So now take your screenshot. Those who want to take the screenshot, yes, page 1. Now is now on or she has retired? Now, are you on or you have retired? Hey, a lot of
I'm
people
here.
have Benjamin, I'm mentioning the names again. Abdul Rafiq, Benjamin, Jocelyn, Lauren, Mary.
Come around though.
We are here.
Nana,
We are taking the screenshots.
so the
Active.
screenshot, take the first one. First page. First page. Have you taken first page?
Yes.
Can I move?
No, please.
Yes.
Please take it quickly. Can I move?
Yes, please.
Can I move? Okay. Second page. Second page. Second page. Can I move?
Yes, please.
Yes.
Yes, please.
Third page. Our summary. Please wait. This is not part. Please take your time. Let me rub this. Yes, take it. Third page. Can we move?
Done.
Fourth page. Can we move?
A minute.
Yes, please. Mm.
Can we move?
Yes.
Fifth page. Can we move?
Yes, sir.
Yes.
Sixth page. Can we move?
Yes, sir.
The other person, are you okay?
Yes.
Seventh page. Seventh page.
We can move.
Are you okay?
Yeah.
Yes, please.
Eighth page. Eighth page.
We can
Can we
move.
move?
Yes.
Ninth page. Ninth page. Can we move?
Yes,
Yes,
sir.
please.
10th page. 10th page. Can we move?
Yes,
Yes,
sir.
please.
11th page. Are we okay?
Yes, please.
Okay, so that is
Yeah.
that. So we finished. Now, in our
Okay,
next
sir. Thank
meeting,
you.
our next meeting Sunday morning, we'll talk about May 2020. We'll talk about the May 2020 question. Then we'll pause for the statements for now. Then please look for these questions. Look for these questions. Consolidated statement of cash flows. There was a nice question in November 2015, but the website is corrupt. So when you print, you download, it will rather bring you May 2016. Look at it. Look at November 2015. The title of the question is Scanners Limited. I have it in a certain book. Let me see if I can trace it and share PDF with you. So look for it, Scanners Limited. Then I think 2025, this March 2025. March 2025. I think there was another cash flow too. Look at it. These two questions, print them out. We will discuss them. So before we discuss them, I will teach you how to prepare the statement of cash flow itself so that it will facilitate your understanding. I'm sure if we do that by close of next week, we are finished with all our discussions on console. Then the following week, we will come and do discussions on business valuation and capital reduction scheme. This topic, business valuation and capital reduction scheme. After we finish with console, I'll go to business valuation and capital reduction schemes. We'll tackle that extensively. When we are done with that, then I'll tackle you interpretation very well. Now, interpretation, we will look at the interpretation of the normal financial statement. We will look at normal financial statement, that's P&L and statement of financial position. Then we'll look at interpretation of statement of cash flows. Interpretation of statement of cash flows. Then we'll look at interpretation of a consolidated financial statement. Is that clear?
Okay.
So we'll look at it thoroughly. We'll look at when you are interpreting normal statements, when you are interpreting cash flows, when you are interpreting consolidated statement to make it strong. I have no doubt, my people, I have no doubt that after I've tackled you strongly, the past questions in this console, and then in business valuation and capital reduction scheme, and then in interpretation. Now, as for the standards, I'll tackle the difficult ones that you run. There are many. We won't get time to do all, but I'll tackle these ones. IAS 12, income tax. So you should be preparing your mind for it. Income tax, the ones you fear. IAS 37, provisions. These are the standards I'll tackle with you. IAS 32, 39, IFRS 7, IFRS 9. This financial instruments. This one, financial instruments. The big standards that you normally run away from, that's what I'll use to help you. The basic ones, learn it yourself. Financial instruments. Then I'll tackle IAS 33, earnings per share. Then I'll look at IFRS 2, share-based payments, share-based payments. When I look at share-based payments, I think I will have to come and look at IAS 19, employee benefits. IAS 19, employee benefits. Employee benefits. Then I look at IFRS 16, leases. IFRS 16, leases. Then IAS 21, effects of changes in forex. Effects of changes in forex, in foreign exchange. These are the standards that are complex that they use to disturb you. So I'll look at them, especially if I look at income tax provisions, financial instrument, earnings per share, share-based payments, employee benefits. If I look at this, trust me, within this group alone, you will get not less than 3 of the standards to answer from it. Then the basic ones like IAS 20 government grant, IAS 40 investment property, IAS 36 impairment, IAS 16 PPE, IFRS 5 non-current assets held for sale. Those ones you can handle them. Those ones, they are basic because time will not allow us to tackle all the standards. But the bigger ones at level 3, which you fear, that is what I'll say you. All right. So on that note, oh, who is that? Okay, so on that note, we'll end the meeting here. I'm sure we have had a good day. We are prepared, go and prepare very well for work. Find time and revise them. We'll meet again Sunday morning. So then, may the good Lord be with us all.
Amen. And also with you, sir.
All right.
Amen.